Okay, so what kind of situation do we currently have on Euro JPY? Now, from a weekly perspective, we have a situation in which the market has clearly created a very nice impulse to the upside, followed by a nice retracement. Now, after an impulse and a correction, if you want to measure the correction, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse. And what you can see that the market clearly stopped exactly at the 0.5%, so the 50% retracement before starting the next move to the upside. Perfect. On the weekly, we know exactly what the market is doing. Let's go down on the daily and see what kind of situation the market is currently creating from a daily perspective. Now, on the daily, we can see that in creating the retracement, the market first made this impulse to the downside, followed by the retracement, broke the structure to the downside, retraced to the previous support, now to resistance, tried to go lower, so faking everybody out. And now it seems like the market will break this zone back to the upside exactly as we want to see. Why? Because on the weekly, we have seen that we want to see the market go higher. However, until this previous support, now turned resistance, will be holding from a daily perspective, we can't be looking for longs because we would be longing at daily resistance, which is never a good idea. However, if the market will break above the area, then we will have this previous resistance that will be turned support, and we can definitely be looking for longing opportunities. Now, before I show you how we will be approaching this situation with students, let's first go and see what we have from a euro and JPY perspective if we check the COT data, so the commitment of traders, what big banks and institutions are currently doing in the market. Now, if we see from a euro perspective what happened, we went from having minus 114k net positions, so way more shorts than longs from an institutional perspective on the euro, to having 118k net positions, so way more longs than shorts. In fact, currently hedge funds have 190k long positions and only 72k shorts. And here, keep in mind that they had 271k, so clear decrease. So at the moment, euro looks pretty bullish. If we go and see what we have from a JPY perspective, we can see that in the short term, we went from 34k to minus 27k, so minor decrease. So we would like to see the market break this structure to the upside. Now, at the moment, this daily candle still hasn't closed, so there is no confirmation at the moment that we have broken to the upside. But if the market will actually make this move to the upside, then what we will have? We will have a market that has created this W formation. And how we will be approaching this situation? First of all, we will be monitoring price action on the 4-hour time frame instead of this area, waiting for the market to shift from a bullish market to a bearish market. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of the W formation at the neckline. And after that, here again with students, we will be monitoring price action on the 4-hour time frame. In this case, waiting for the market to shift on the 4 hours from a bearish market to a bullish market. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.